And in our top business story, DP World has announced a 25.1% growth in profit levels on a like-for-like basis for the 12 months ending the 31st of December 2014, as a result of a strong performance from its global portfolio of marine terminals throughout the year. At a press conference today, His Excellency Sultan Ahmed bin Sulayem, the chairman of DP World, together with the entity's CEO and CFO, announced the financial results, as well as the future plans for developing their overseas ports. DP World posted revenues of $3.4 billion in the year ending 2014, which is an 11% increase over the same period the previous year. Considering the performance of all of its terminals, DP World has registered a 10.5% increase in containerized revenue, while like-for-like non-container revenue increased by 14.2%. As a result of a 12.3% increase in adjusted EBITDA levels at $1.58 billion. The senior officials announced that the figures have led to a 25.1% increase in like-for-like profit attributable to owners to reach $675 million. Additionally, earnings per share witnessed an 11.7% increase compared to last year at 81.4 cents per share. Commenting on the financial results of the year, the officials attributed the growth to the $807 million invested in their long-term assets, which also resulted in 2 million TEU capacity added to Terminal 3 over in Jebel Ali. According to the officials, much of this success has resulted from the London Gateway Port, where the global marine terminal operator has established 6 deep-water berths since its opening last year, with 2 more to be added this year. Looking ahead in 2015, the chairman of DP World stated that they are aiming to add 8 million TEU capacity to their global portfolio, which also includes new facilities in India and in Turkey. Additionally, it was revealed that the $2.6 billion acquisition of Economic Zones World is expected to facilitate their growth in the years to come.
London is a game changer. The norm in Europe or in many countries is that the ports are 100 miles from the city. This is the first time we brought the port into London. So we are close to our customers. People have realized the value. The port has logistics park, so it is, again, adds value. The acquisition of EZW is part of our business. We have an experience in Jebel Ali where, by establishing the free zone around the port, we have emphasized the importance of the cargo to the port. We have anchored the cargo near the port, and that worked. And we're going to do the same in London with the logistic park. Investing in the free zone gives more value to our business. And naturally, in our next year result, we will see the effect of the profit of the free zone as part of the profit of DP World.
Dubai's financial free zone has revealed that its total workforce increased by 14% last year as hundreds of new companies were licensed. The Dubai International Financial Centre reported an 18% increase in the number of active registered companies operating, reaching 1,225 at the end of 2014. That's compared with 1,039 in 2013. A total of 242 new companies were licensed last year, compared with 199 new companies licensed in the previous year, representing an increase of 22%. That's according to a DIFC statement. The growth in new companies means that, on average, the DIFC granted licenses to 1 new company every working day of the year. Only the boom year of 2008 registered a higher number of new company licenses. The total workforce rose to just over 17,000 people from just over 15,000 at the end of 2013. The number of net new jobs created in 2014 was 42% more than the net new jobs created in 2013. In terms of office space leased, net additional leased commercial office space increased 15%, reaching 282,000 square feet in 2014. Of the 1,225 total active firms at the end of 2014, there were 362 financial services firms, 682 non-financial services firms, and 171 retailers. The UAE Ministry of Economy is setting up a new integrated investor zone within the 5th annual investment meeting, also known as AIM 2015, for more direct investment deals in an interactive setting. AIM will be held from the 30th of March to the 1st of April, and the new zone is dedicated to investors interested in meeting prospective clients and AIM participants in order to facilitate on-the-spot transactions. The ministry is introducing this concept for the first time at AIM as a part of a strategy to encourage innovation and creativity in investment cycles and to boost relations between foreign investors and investment destinations. According to news agency WAM, the area will boast a proper environment for concluding deals. Abdullah bin Ahmed Al Saleh, the Undersecretary of the Ministry of Economy, the Foreign Trade Sector, was quoted as saying that we are launching the Investors Zone in response to the need for more effective interaction between concerned parties, as well as to enable a better understanding of procedures and rules for entering new markets. The ultimate goal is, of course, to boost foreign direct investments. Economists and local business people are attributing a drop in fresh food prices in Dubai to the volatility in currency and oil. The price of fresh food in Dubai dropped by 1.1% in February this year compared to the same period in 2014. According to a report in a local daily, Dr. Abdul Razak Al Fares, the chief UAE economist, was quoted as saying that the appreciation of the US dollar against the euro, as well as a low oil price, are the main factors behind the drop in food prices in the UAE, adding that overproduction of food and a decrease of the market's demand is also another essential factor leading to this drop. To compile the food price index, officials conduct a monthly collection of 590 price quotations for fresh food items from 7 major retail outlets in Dubai, which includes most of the essential fresh food categories: meat and poultry, fish and seafood, fruits and vegetables. The index shows that the downturn was due to price drops in the fish and seafood group by 12.8%, while the price of meat and poultry, fruits and vegetables increased by 3%, 2.2% and 0.2% respectively. That's according to the Chamber Index. However, the index highlighted an upturn in the prices of fresh food by 1.5% in February compared to January. The largest increase was in vegetables at 3.8%, followed by fruits at 3.3% and then meat at 1%, while the fish and seafood category saw a 3.4% drop.